policy covers for wind and rain. That's really what the damage is, right? So that's what it is. So wind and rain. So if there's a hurricane, there's wind. If the damage was caused by the wind, then you're covered by the policy. So if the wind blows off shingles of your roof, the wind blows the shingles off the roof, and the roof is not too old and it's been properly maintained, or whatever. It's not 20 years old and it's still, it's there's more to it than normal wear and tear, right? So the wind comes, knocks the shingles off, water goes in because of the shingles, goes in through the roof, through the ceiling into the house, and the water drops on top of the stove.
Good morning, Robert Morillo, broker associate with Team Aroa at Compass, Florida, license number 3373543. Here on the DM with John.
Good morning, John Sepulveda, MLS 1309244, coming at you from Orlando, Florida, for another episode of the DM, baby.
Orlando, Florida. What's going on, John? What do you see in the market today?
So we had yesterday, we had a JOLTS report.
A JOLTS report?
It's the job openings and labor turnover report. So just basically in the week when they do jobs, it's just basically it's the first kind of shoot a drop in when they do the job reports. Today is the ADP, and on Friday is the kind of biggest report. Again, that's the one in February. We had 517 new jobs, so we'll see how that plays out. But nonetheless, the JOLTS, I got the data here. 9.9 million openings in February, and the expectation was 0.9 million openings. This is about the openings, job openings.
So 9.9 million
job openings in February.
The anticipation was 0.9.
No, the anticipation was 10.4 million.
Oh, 10.4. Okay, so a little shy of what the anticipation was.
That's actually quite a bit. In the jobs kind of reporting thing, that's actually quite a bit. It's the lowest. It's a 20-month low, so it's the lowest number in 21 months. So it's a pretty big number in the in the scheme of the things. Now this is a little, and so the curious point about this data point is, number one, it has the openings. So the Fed has been looking at this, and it's been, they're expecting 10 million, right? So it's been, so 9.9 is the lowest, right? So they've been above 10 million pretty much all the time, right? That's 10 million job openings. So that's, it's a lot of job openings. So, it seems like a lot.
So okay, hold on. Just to be clear, 10.4 million jobs is what was anticipated, right?
Openings.
Right. And there was actually 9.9 openings.
Correct.
9.9 million. Okay. Just wanted to make sure.
So there's a lower number of job openings, right? So they've been looking at the data, 10 million jobs, and I'm just rounding 10 million, right, for the sake of the conversation. So that number is a little misleading, because there are, especially after the pandemic with the remote jobs, there are job postings that are for remote positions. So if a company posts a job for a remote position and they post it in 10 different states, that's not 10 different jobs. That's just same job in 10 different states. You follow me?
Yeah.
They were for remote postings.
Correct.
So that's a false positive, right? So there's not 10 job openings. There's only one. It's just advertised in 10 different states. But that's not 10 new jobs that people are going to get. Only one person will get that job. So that number is not accurate. You follow me?
Understood.
That's one data point. The other data point to kind of keep track of, that number every month has kind of been rising. Like it's been up there, but there's a specific sector in the entire jobs report, the service, hospitality and service.
Okay.
That has been climbing up every month, right? And that has kept right, because we've got to remember everything, all this is a puzzle, it's all tied together, right? So the Fed looks at all these different data points and all these different reports, and that's how they ascertain whether they're gonna what their policy is going to be. So the jobs data has been saying there's too many jobs. So and in order to lower inflation, unemployment has to be high. That's the formula that they're using. Like they're using the formula they're using as to bring inflation down. You have to completely cut off, you have to affect supply and demand, right? Because that's what's happening, right? The inflation is caused by there's too many dollars chasing too few goods, right? That's what inflation means. That's when you boil it, right? You got too much money on the street and not enough things to buy, and so that's when people start overbidding. That's what we saw in real estate. That's what we see kind of, that's how inflation is created. Too much demand and not enough of whatever the demand is for. So the Fed looks at, like I said, one of these data points is jobs. So if it looks like there's a lot of jobs, okay, we need to do more because the inflation, we're not beating inflation yet. Like they're trying to beat the inflation back with a stick. And they're looking at the jobs report and saying, it's still too many jobs, but that's not real data. Kind of like the data reports that I've explained, the lagging, it's a lagging, like the roller coaster, right? Same thing. It's just the data takes a while to catch up to the reality, and the Fed looks at the data, not at the reality. So the jolts. So this report says now that kind of gave a flashing signal. So yesterday, so what that means is the per that report, there's less openings, so they're starting to be paying in the labor industry and job market, right? And that means that job market, there's less jobs or high unemployment. That means, quote unquote, that's good for inflation, right? That means that inflation's going down. And for this topic that we're discussing, which is real estate, inflation going, inflation going down equals good lower mortgage rates. Okay. So for the sake
theoretically,
no, there's a correlation for sure. When inflation goes down, rates are going to go down. Inflation goes up, mortgage rates goes up. Just like the 10-year bond goes down, rates go down. The 10-year bond goes up, rates go up. That's pretty much how it works.
It tends to
not at the same, but it's pretty. They're pretty much correlated how they react. So I mean that's the economy or the mortgage, right? We're going to talk two separate things. One is the economy and one is the mortgage world, right? And we're kind of in between, right? You and I are in both worlds, so we kind of have to mix and match. So a recession, so hard economic times are good for the mortgage industry in the sense that brings rates down. Okay. And when rates go down, that in turn helps the economy start getting better, because when rates go down, then people will be able to afford, more, right? People are stopping now. It's rates are high, they can't afford it. So when rates go down, the payments will be more affordable, and more people will jump in and start buying real estate. And then that will start making the economy go again, and start churning the economy, and then things will kind of start straightening out and go back, quote unquote, to normal. Right. So that's kind of how the cycle works. So yesterday, this JOLTS report came out. There's less job openings. So what was the reaction? The market said, okay, this means that the Fed's going to stop pausing rates. Like all the action that the stock market is doing now, for the most part, is related to speculation on what the Fed's going to do. Is it going to pause, cut, pivot, keep raising rates? Like that's kind of the thing. So that when the jobs report comes out like that, so people's, okay, the Fed's, inflation's coming down, the jobs are, tight, the Fed's going to pause or start dropping rates, because now the market's actually betting that they're going to have rate cuts by the end of the year. Rates are going to be actually lower. They'll be cutting rates. That's kind of what the market is betting on right now. So when that happens, that affects the stock market went up, that affects the bond market. So rates, kind of stabilized. They're a little bit on the downtrend. The 10-year bond was on the downtrend yesterday, slightly, not much. It's kind of in a range, and it's just kind of bouncing in between that range. And we've been there for a bit and kind of waiting for the market, right? So we got a good number yesterday. If we got a good ADP report today, and then we get a good report on Friday, that all kind of might start coming together, right? Because there's a hint with the numbers from yesterday's.
Mm-hmm.
Now, the warning signal is last month, in February, it was the same thing. We had a ADP had a number, not the JOLTS was not as, nothing really happened. ADP came out, they were expecting 195, and then the report on Friday came out, and the BLS report came out on Friday, and it was, again, February, 517, and threw the market into a frenzy, and rates went up. Totally unexpected. So we don't know what's going to happen now. That was a data using the seasonal adjustment for migration last year, and I explained how that went, how they came up with that 500,000 figure. So that's a one-time a year adjustment that they make, right? These seasonal adjustments are only once a year. So we'll see what the number comes out on, today and then on Friday, and hopefully that's a number that shows the Fed that the market is really feeling tight, because the market is tight. I mean, people are definitely starting to be out of work, and layoffs are it's starting to come. You know what I mean? Gas is starting to creep up again. I mean, it's just these little things are all kind of there and just affecting every day. It's impacting, all these little bits and pieces and these little blurbs everywhere, and it's just cooking and melting and boiling, and it's all boiling in there. And when it boils and it blows, it's going to blow.
So that was going to be my next question. Let's talk about the unemployment rate. The unemployment rate, apparently, from what I see here in Google, at 3.6%, the number of unemployed persons, 5.9 million, edged up in February.
Mm-hmm.
So how accurate is that number compared to the job openings? Okay, so if we have 10 job openings that are the same single opening for a company that is advertising in 10 different states, then that's 10 less off of that number. So when you compare the unemployment rate versus the job opening rate, how do those dynamics work?
Well, if there's 5 million, what was the unemployment? Look, I'm not reading the data. So what was the unemployment? How many job openings?
Unemployment rate 5.9 million. So essentially, if you look at it, if there's more job openings than there is unemployed persons,
it's a good thing, right? The economy is doing well and things are happening, right?
We should have no unemployed persons. Everybody should be working.
Well, so here's the problem with that data, and the way the Fed is looking at the data. So number one is what I explained, the multiple job openings for remote, right? That adds into that throws more jobs in there than there really are. You know what I mean? Like that's just skewed data. The other issue is that the Fed is not looking at is the labor participation, meaning how many people are actually looking for jobs. That's a big number that the Fed is not really taking into account. And there's pandemic, there's a whole bunch of people that at the pandemic stopped working and have not gone back to work. They stopped looking for work. They're just out of the labor force.
Yeah, there's a whole bunch of people need to get back to work, America.
Well, no, see, I mean, people are working, right? Because if they're not working, how are they living?
No, of course, but I'm talking about the people who are not working. They need to get back to work.
But I'm saying is they are working. It's just how they're living. All the extra benefits, all that stuff has been cut off. So they're not living. I mean, they're not getting stimulus. They're not getting extra money. Like the unemployment, all that is dropped. People are back to regular. Whoever's unemployed has regular unemployment. They're not getting all the extra money, because what was happening during the pandemic was people were getting paid being unemployed because states and the federal increased the amount of unemployment that people receive. People were getting more money at home unemployed, collecting unemployment, than going to work every day and working 8 hours a day. So that's why people are going, wait a minute, I'm not going to go wash dishes when I'm making $500 more a month at home. You know what I mean? That's kind of that was the logic kind of behind that, but that's not really there anymore. So what's happened a lot is a lot of people are like side hustles and side gigs and online business. And so So they're not really in the labor
Okay.
force looking for jobs. They're doing other things, and they left the job market. They said, I'm done with this. I'm not working. Some people don't want to walk to the office, and they have to go back to work. I'm not going back to the office. So that there's a lot of that going on. Like, you know what I mean? That dynamic is happening. So there's less people looking for the jobs.
Sure. Gotcha. So they may be in unemployment status with the statistics, right, with the census, but
But there's
they
income coming in.
supplemented their income through a side hustle, opening their own business. That
Right.
makes sense.
So there's less labor participation, right? So there's less people looking for work. So that
Mhm.
means, right? So the report says 5 million people are unemployed, right? But
Mhm.
there really could be more. They're not, because they're not collecting unemployment, right? The unemployed are people that are collecting unemployment. That's what the data is from, right? So if they're not collecting unemployment, but so it looks like, okay, well, there's 5 million people working, there's 10 million jobs, we got 5 million job openings, we're fine, we got plenty of work. But
Mhm.
that's not necessarily that's not really the number, right? So there's not that many people looking for work, so that number's skewed. There's less people looking for work, so that number's skewed. I mean, what is the formula? I don't think anybody knows, can figure that out. It's just that the formula they're using has some incorrect data that they're looking at, and that's makes them make decisions that, it's what they're saying. They over tighten is what the kind of the term is used. So the Fed over tightens the market, over tightens, and with the rates, something's going to break, right? And then when something breaks, then obviously there's other consequences. And then the Fed will start cutting rates. So when you see the Fed cutting rates, and the next Fed meeting, when the Fed cuts the rate, it means that they broke something.
Yeah.
I mean, I laugh, and it's unfortunate, but that's the unfortunate part is that you can see it's going to come. You can see it's going to happen, and they're just going right through the brick wall.
That roller coaster is gonna break through.
It's going to hit a brick wall. It's going to hit a brick wall. It's going to be a hard brick wall.
The brick wall's gotta break.
No, the brick wall is the one that's going to break. It's just that's I mean, the economy and the dollar is going to break. I mean, that's what's going to happen.
Yeah.
It's a big that's another subject for another day. But the dollar is, as we know it, it's soon in the not too distant future will no longer exist, unfortunately.
All right, so let's go into the topic for today, right? And I'm glad we're having this topic now because it aligns with what we were saying before we started the episode today. And it's pretty much the impact of hurricane season on Florida real estate, right? So right now, something that's been going on, two things that I've been noticing is that insurance companies have been raising rates on homeowners insurance and or dropping the policy entirely and moving out of the state of Florida. That's crazy. Both of those are crazy.
That's a big problem.
Yeah, so anybody who's watching right now, please comment if you guys have experienced your insurance getting hiked up or your insurance company dropping because they're moving out of the state. What's up with your homeowners insurance, John? Have you seen any changes in your insurance policy as a result of insurance companies moving out?
I did, and actually, it's funny enough. I had the experience. I've never had that experience here, right? Because in Massachusetts, that's not really a thing. Like,
Have you guys ever had a hurricane in Massachusetts?
There was one. I was in high school.
Mm-hmm.
Many moons ago.
Sorry to date you.
And it was a hurricane. It was a big, by the time I got there, it was just a rainstorm. That's not really a hurricane compared to what's here. But they don't. I mean, it's just so far up. It doesn't really happen. We get the nor'easters with the snowstorm and 28 inches of snow, which is another different kind of hurricane. But I wasn't used to that. So came here. It was really busy. It was like 2018, 2019. I was just super crazy, and market was just super busy, and it's not the best practice, but I'm very organized and everything, and business and work related, but my personal things I kind of leave for the. It's not that I'm disorganized. I just leave that for the last thing to do. I do everything else first, and
You
mine is the last.
prioritize your business and work.
Yeah, and then everything else, and then my just those little things I kind of leave for last. So, things that are new that kind of pop in new take a little bit longer to be processed. Meaning, I get something new, something in the mail that's not a regular occurrence. That takes a little bit longer for me to kind of get to and look at.
Get around to.
So I got this big envelope from the insurance company, whatever. Okay, just kind of, and like I get an email, like your policy is, it's expiring tomorrow. You need to call. I'm like, what? Like, what do you mean? Like, so I figure out. I called up, and they realized that they had sent me the information that the company was closing, was being taken over, whatever the terminology is, and I had to find a new insurance agency. And literally, I was doing this like the day, like it's expiring at midnight. Like no policy at midnight. It's really, so I'm like, oh crap. So I'm trying to kind of scramble, and this is something that the state took over. So it was kind of, the company ceased to exist, and then but they kind of placed me because I didn't do it myself. They kind of put me in they transferred me to another insurance company. So they did it, which was fine. You know what I mean? It was okay. It was fine. Price wise, not much higher than the rest. You know what I mean? Like it wasn't anything like they just put me in the super expensive policy because they just switched me to a new company, and it's been fine. I actually stay with the same company because I shopped it around and the prices are pretty much the same, and it's been fine. So I ended up staying there. So that was my experience. First time kind of going through insurance here in Florida and a company leaving, and it was, I don't know. I didn't realize much of the process again, because I kind of didn't realize that was happening until the day the policy was expiring. So, but it was, one company just disappeared. The state took it over, see you later. You got to find a new insurance company. I mean, that's pretty much what it is. Had my new insurance been priced a lot higher than what I was paying, that's what I was going to have to pay until I figured it out. Right. So, because you got to have the house insured. So, it was messy, and it was, kind of first time going through it. That's been my only experience as a consumer with insurance. With buyers I've worked with or buyers that have reached out to me, what's happening is they're getting the notice of you need to, change your roof, or we're not gonna, re-up your policy. Yeah, that I'm starting to see. And that's where it's going to be messy with the insurance. And that's another thing that's coming, in the not too distant future here in Florida. There's going to be a lot of people that are going to be scrambling to get a roof replaced because their insurance company is not going to say you need to change the roof, or we won't cover it. So that's going to start getting complicated. How they do it, obviously, I have no idea how they're going to play it out and how what will happen. I don't know. And they'll cover the house, but not the roof. I have no idea. I'm not in insurance. I have no knowledge of how they would handle that, would they do that. But what I do believe is that people are going to be in a situation where they need to go get money real quick to, 30 grand, 25 grand, whatever it is, to get a new roof. And there's going to be a need for people to do that.
Absolutely. Because before it was like, all right, if the roof was 20 to 25 years older, then the insurance might give a little if about it. But now they're saying 10 years or older. If 10 years or older, they're either increasing the rate or making it more difficult to insure.
Because what happened was, the roofing companies, they go out to people's houses and like, hey, we're in the neighborhood changing the roof, and you can change your roof. And because it happened to me, they knocked on my door all the time. We can change we're in the neighborhood doing the job, and we see your roof, we can do an inspection, and we can replace it for you, no cost, no deductible. What do you mean no cost? Yeah, let me look at the roof. They go look at the roof, and they're, oh yeah, we need this, we need that. And make the claim, and you got to put a date, and it's a storm, and here's the date of the claim, and just there was a windstorm, and just make the report that day, and that's probably what took your shingles away, and blah, blah, blah. And that's how they did the report. So people, oh, great, new roof, sure, that sounds like a great idea. And they started putting new roofs, and then before the homeowner could transfer
the rights
to the roofing company for litigation.
Mm-hmm.
Because I went through it. It happened to me. Like, I went through that experience. They're like, oh, don't worry about it. Just, we can go to, our lawyers will take care of it. Just, sign them. I'm not going to sign anything. Like, I'm not going to go to court, litigate. Hold on a second. Like, that was my conversation with one of the companies that knocked on my door.
Mm-hmm.
And it's like, and my roof did need to be replaced, and I did end up replacing it, and my insurance did cover it, and I paid zero. That's my experience, right? Because the roof did need to be replaced. They came out, the insurance company inspected it, and they replaced the whole roof.
Yeah.
So when it needs to be replaced, the insurance companies replace it. The problem was that I think that there was a lot of roofs that did not really need to be replaced that were replaced. And then then when they go to court, there's a whole bunch of cases that are in court because the insurance company said, we're not paying. No, you filed a claim, we're not paying. So that is, I'm not sure what the status of that is, but there's a lot of litigation and there's a lot of cases of lawsuits against insurance companies for roof claims. But they're saying they're not paying because they didn't need to be, you know what I mean? They doesn't qualify, we're not paying. So then they changed the law. They just signed it into, the governor just signed it recently that you can no longer transfer those rights to litigate to the roofing companies. So you can no longer do that. So that's going to take away some of the.
A public adjuster or an attorney?
What do you mean?
Like now in order to file those claims, it either has to be done through a public adjuster.
Correct. No, not the roofing company.
Yeah, correct. Yeah, not the contractor.
Correct. So that's going to obviously take away, a lot of, bogus claims, you know what I mean? That don't need to, because think about it. I mean, a roof, that's just the cost, they just replace roofs. I see in my neighborhood, like the roofs just people just replace them.
No, when you see one roof go up, you see another 10 go up too.
Absolutely. I mean, and if they knock on your door and say, come in, we'll replace it for free, or, no cost, no deductible. Really, just sign here. I mean, okay, people sign and they do, and they go for it. That's a mess, and that's happening. So that's unique, I think, because of the hurricanes is why that happens here in Florida.
Mm-hmm.
I mean, in Massachusetts, I never heard of that doesn't happen. That doesn't exist. Like, I never heard of an insurance covering the roof. Like, it's just, you know what I mean? There's just not. It's just, the
roofs, a lot of flat roofs up there, huh?
Oh yeah. And the roofs are, too much snow on it too much snow from a snowstorm and they collapse. I mean, that's what happens. That's the type of roof damage they get up there, but not because it's, you know what I mean? It's just so, but the hurricane, as we're talking about here, that's just a whole different dynamic and a whole different animal that puts another spin on it.
Yeah. So I know, from my experience, I mean, since I've been a realtor, there's been maybe 2 to 3 storms that have impacted the market as far as things slowing down for at least 1 to 2 weeks before people get back into doing things. But I do know, let's say when there is a storm, it kind of, the pending deals, they push to try to get closed before the storm comes through, just in case there's any damage to the property. Or buyers say, no, I'm not willing to rush to close. I'd rather wait to see what happens after the storm, just in case.
And insurance too. You can't buy once a storm is announced. You can't buy insurance. You got to wait until after the storm. So you can't close anyway, even if you wanted to close. And if you haven't bought the insurance, you can't. There's a period like I forget what it's called. You can't buy the insurance until after the storm and they assess. So definitely complicates things.
Another way that it impacts real estate is the preparation for storms too, right? So this is the part, like right now, if we know every year, hurricane season is what? July, August, September.
June 1st or September 30th.
All right. So I think right now, I'm glad we're having this episode right now, because right now is the time to be prepared if you're not already, right? For the households, the new formation households that haven't had a hurricane season yet, you're gonna pay less if you prepare now. That means getting your cases of water, getting wood or aluminum panels to cover the windows, all of that. All of that is probably best to do it now. Which is preparing, in the calm before the storm, both like figuratively and literally. So, I mean, what has been like you gave yourself up as an example, putting things off in your personal life until later, like something as simple as checking your mail. Have you, the last storm that we experienced, I think it was Ian, right?
Mm-hmm.
Did you find yourself scrambling to get ready?
Nope.
Not even, right?
I had a that's the day of the seminar I was planning. I was fighting with the people, like, why are you going to close it? It's not raining. Like, no, don't cancel it. So, I mean, I was trying to have an event the day of the hurricane. And I'm fighting with
I
the
know
people.
wood definitely goes up.
Say what?
The cost of wood definitely goes
Oh,
up.
absolutely. Yeah. I mean, everything. People go, I mean, the food and water, I mean, people are nuts. People go and they, I mean, so, I mean, it's insane, but I'm not, again, unfortunately, I'm not, that's just not, but I said in another episode, right? I missed I was late for when the Lord was giving out the talents for being handy. I was late. I didn't get that one. So I'm like, hurricane coming. I mean, batteries and flashlights, and we always have water. We drink a lot of water here, so I'm always like there's always bottles of water, so that's really not, you know what I mean? Like we drink a lot of water, like my kids, my wife, we're always having bottles of water. This is kind of, you know what I mean? So that's not a thing for us.
That's a best practice.
Yeah, I mean, it's
an everyday.
So yeah,
best practice.
We do go to the supermarket and and do buy extra water. You know what I mean? Just like everything.
What was crazy before was how the value of toilet paper went up. When they were saying that
it was like drug is insane. Like I couldn't figure out, like, why are they buying toilet paper? Like I never got the answer to that. I'm not sure. I'm just not sure what that madness was about. But it was insane.
Right. Yeah.
People like smuggling and selling toilet paper on the black market.
Yeah. They were saying, oh man, there were so many memes about toilet paper when that was happening.
Insane.
So when it comes down to it, I know when the storm does heavy damage, like basically lays homes flat, I know that affects property values. However, after insurance claims and people, people whose homes did survive a storm, they tend to have the opportunity then and there to fix up things that they may not have been taken care of, or opportunity to redo a whole space. So property values can stay up in the midst of a storm. And again, it's just a matter of how soon after a storm can people start closing on their deals. Have you had any experience with any mortgages falling or being accelerated during storm season?
No. Well, my only experience has been, I've been here since 2017. So whatever 2-3 hurricanes have been in that, that's been my only experience. Didn't have any, like, no properties were damaged that the closing had to be postponed. It was, the only kind of issue was the insurance. You gotta, they haven't bought the insurance. You gotta wait until after the hurricane to get the insurance. But then they went and re-inspected the property and nothing happened, and the closing went on. So other than the delay during the storm, I've never had any bad experiences, fortunately.
Yeah, that's good. Thank God. Because I know when those storms come, they get pretty ugly.
I mean, in people's lives, you know what I mean? I mean, it's just, right? Just you got, you know how it is, like multiple, this house closing affects the next one, and the next one, it's like a domino.
Yeah, domino effect.
Especially in a tight market like this, it's complicated.
Mm-hmm. Yeah, absolutely, absolutely. So,
Speaking of tight market, and I forgot to mention that, and I just kind of brought back the appreciation numbers came out, and homes are appreciating. So,
okay.
as in contrast to the news and the market crash and how the collapsing and the real estate's going down, it's actually going up in price slightly, but going up in price 2.4%, 2.2%.
Polk County in the last 7 days has seen 136 price increases. Orange County has seen 95 price increases.
There's no inventory. It's tight inventory.
Osceola County has seen 86. Lake County has seen 12 in the last 24 hours and 61 in the last 7 days. Seminole County has seen 5 in the last 24 hours and 36 in the last 7 days.
And what does that mean?
Price increases?
Mm-hmm. Well,
I mean,
price increases, the number of price increases, and in the short period of time of the price increases that you just mentioning.
Yeah.
What does that mean?
I mean, that shows slight appreciation. But I mean, there are reductions happening simultaneously, and the reductions do happen to be more. So when you say price or appreciation, homes have been appreciating. Are you saying that based on appraisal results?
Unsold. That this data is the data is on sold homes, not on anything else other than sold homes. Because
Gotcha.
the way you're looking at the data is, yeah, there's price drops, but there's a large number of price increases in a very short period of time. You notice them all in a short period of time. That means that people, oh, wait a minute, I can get more because it's tight. I mean, if you remember 3 weeks ago, with the first episode, what was the title of the thing? I don't even remember. You can still buy rates, and that you can there's a small window. That's pretty much what I said. I gotta go back and look at the video. I said there's a very small window for buyers to go in there and right now, because prices are going to go up. Prices are going up.
Yeah, the rates have gone up in the last few days, right?
No, I mean they've gone up and down. They're stable. The rates are, but they're trending down. It's the number. Like they're trending down, but slightly. I mean, it's just slightly trending down. We've had rates reprices where rates increase. We have reprices where rates decrease, but they're trending down for sure. And it's going to get, as these reports come out, like, these things they'll start. See, what happens is if you picture a chart, the rates are, in the range, and they're bouncing between that range. They just kind of been there, bouncing. They haven't broken up or below. The market hasn't allowed. They've tried to break up and they've tried to break low, and it hasn't been able to do it. So now, as the sort of the data's coming out, they're tracking down, and then when the reports come out, like if we have a good report today and a good report on Friday, good meaning similar to the JOLTS report that shows that unemployment is going up, right? So that's not really a good report, but for mortgages is a good report. So if we get a good report for mortgages on unemployment, that will help the bond hopefully break through a couple of resistance levels that it has on the chart. And it's not going there. The market's not letting go there. So if that report comes out, and there's a whole bunch of room to on the downside for that chart, for the rate for the bonds, the 10-year bond to go down to. And then you get the May 10th report, which should definitely have cleaner and more realistic housing data. And that May 10th report should definitely show the unemployment rate in the threes. as opposed to the fives. I'm sorry, not unemployment rate, the inflation rate in the threes,
Okay.
not in the fives. And that will help push. I mean, it's not that rates are not going to go, 3%. That's not happening, right? But
So what is that? What is that range right now that it's toggling back and forth in between? Is it between 6.5 and 7.5?
no, I'm not talking about
6 and 7?
no. I'm not talking about the rates. I'm talking about the 10-year, the chart on the 10-year.
No. I know, but let's go back to the interest rates. Like, what is the range that you were
Yeah, they've been bouncing around the mid sixes,
between 6
yeah,
and
like
7?
mid six, yeah, between 6.5 and 7. That's kind of the, you know what I mean? They've been bouncing in that range, in that general range.
Okay.
We need to be in the fives. We get to the fives,
We
that's
get to the 5s, we get to the sweet spot.
yeah. I mean, fives are
Get
fives.
to the 4s, we get to the 4s, we'll be
Oh, forget
seeing
about
more.
it. We get to the fours, yeah. But if we get to the fours, we're in trouble. If we're in the fours, we know the economy is really, 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 really in trouble. So we don't want to be there because that'll be a lot of pain.
Hmm.
The
So
the fives would reflect less pain, to the non-mortgage world.
Mm-hmm.
The rates in the five, they get to the four, that's going to mean that they had to cut rates, and then if they're cutting rates and they cut rates fast, that means that something broke really big and they need to fix it. So that will be good.
Yeah. Okay. All right. So we ain't the weatherman, but we know clearly the impact that hurricane season can have on Florida real estate. We see what's happening with the insurance companies. What is your opinion on whether or not these insurance companies, do you think they're upholding their integrity by leaving the state? Do you think it's
Well,
right that
I
they're
don't think
doing
it's.
it to them?
I honestly don't think it's. I mean, again, I don't. I have no knowledge of on insurance or how it works or any of that stuff. But
We need to get somebody on the call.
yeah, that somebody has, who can. I mean, other than. I mean, I don't think they're leaving because they want to leave. You know what I mean?
Mhm.
I think they're leaving because they're not making money. I mean, I think what I mean. That's really what it is. I think that the way the system is set up allows that. I mean, that to me that was mind boggling. I mean, just the amount of people that knocked on my door to tell me that I could get a new roof, with no money, and what I mean, it's just mind boggling how often that occurs. And I mean, how is somebody? Oh, yeah, new roof, no money. No, I'm all set. I'd rather pay for my. You know what I mean?
It's almost like instead of a no soliciting sign, you should put a sign up that says I don't need a new roof.
I mean, it's insane. It's like, what I mean? It's just, but anywho, I mean, it's just that a market cannot be sustained like that. So, I don't think they're leaving because they want to leave. I just think it's a money situation, but they can't leave, right? You can't have a state where people can't buy real estate because they can't get homeowners insurance. I mean, it's just that will not happen. So they'll figure something out. There'll be a cost, but they'll figure something out. But hopefully this, and I think the cost is one of the or collateral damage, if you would, of this, whatever they do to fix it is going to be a whole bunch of people that need a roof that do not have the money to put a roof on a house.
Yeah.
They don't have the means to get.
We talk about the roofs because that's the main thing when we think about a storm, right? But what about the homes that are in floodplains and in flood zones?
But it doesn't matter because if you don't have flood insurance, it doesn't matter. Hurricane or no hurricane, that's a different animal. Because insurance-wise, so and again, now I'm not an insurance expert, right? So
yeah, we're not experts in this field.
Insurance, a policy covers for wind and rain. That's really what the damage is, right? So that's what it is. So wind and rain. So if there's a hurricane, there's wind. If the damage was caused by the wind, then you're covered by the policy. So if the wind blows off shingles of your roof, the wind blows the shingles off the roof, and the roof is not too old and it's been properly maintained, and whatever. It's not 20 years old and it's still, it's there's more to it than normal wear and tear, right? So the wind comes, knocks the shingles off, water goes in because of the shingles, goes in through the roof, through the ceiling into the house. and the water drops on top of the, I don't know, the stove, right? And the stove breaks because there's water damage, right?
Yeah,
So,
yeah.
you know, the adjuster will come to look at it. They'll see the roof. Yeah, the roof. You know, the water came through. Yeah, it landed on the stove. Yeah, you know, there's
This is the result of the
there's the
storm.
results, and you're covered. Yeah, that's pretty much how it works. So it's not. I mean, there's not too much. Like, you can't. You know, the same example, the stove, the roof. Then you can't say that in my bedroom window there's a crack in it, and that happened from the hurricane.
So that sounds like it's more due to negligence.
Correct. Or something else, not wind or rain, which is what's covered in the storm. So the flood is a whole different animal, because that's what happened in the last hurricane here. A whole bunch of people got screwed
Flooded.
because they don't have flood insurance. Because you don't. Number one, the insurance companies, for the most part, at least that's been my experience, they never offer you like, hey, here, do you want to buy flood insurance? Right?
They only it's been based on per requirement.
Correct. Per request.
Or request. But
And why
most
is that?
people, if it's not required, if it's not required, they're not going to request.
That's my next point. So and that's kind of how it works, right? Is people, what do people do? Well, how do people shop for insurance, for homeowners insurance? What's your experience as a realtor?
The same way buyers shop for most things. I'm gonna say this with my eyes closed. What's the cheapest I can get?
100%.
Unfortunately.
And unfortunately, and then to now, it's what's even worse. The insurance, salespeople, insurance companies have the default position is giving the person the lowest quote.
The best rate. Yep.
Well, not the best rate, the lowest quote. Because that doesn't mean the lowest quote doesn't mean it's the best rate. It just means you have less coverage. Because insurance is risk. What insurance is risk protection. And all you're buying with insurance is peace of mind. That's really all you buy with insurance. I mean, nothing else. I mean, now some insurances you have to buy. If you're a homeowner, you have a mortgage, you have to pay for homeowners insurance. But if you own the house free and clear, you don't have to have homeowners insurance. It's optional. So what insurance provides is peace of mind, right? I have the peace of mind that if a hurricane comes and my roof is gone, my insurance will cover my roof. Or if I don't need to worry about it, and if I'm rich and I don't care about, I have the money to pay for a new roof, then I don't need insurance. I don't need that peace of mind, because that's not worrying me. I mean, that's really all insurance is risk, and you just mitigate the risk and the loss. That's all it does. So people's go-to is what's the lowest, and then the insurance companies are not, what they provide is the lowest quote. What's your insurance? $74 a month, done.
Or to beat out the
competition. Exactly. Right. Just like when people call me, what's the rate? No, there's more than the rate. It's just it's a lot more than the rate, So
what's the rate? What's your profile?
What are you looking to do? Like, what's the lowest insurance? What is it going to cover you? Do you understand that if this happens, this will happen? If you have this amount of insurance, this is what's going to happen. If you have this amount, this is, people don't measure those consequences, because they don't go in with a plan. So the hurricane comes, there's no rain damage, flood all over the place, all the backup and that is zero. There's zero coverage. People think, oh, insurance. No, if you don't have flood insurance, sorry.
Right.
And the scary part is so cheap. Like, that's the sad part of the whole situation.
It's much cheaper than if and when something happens.
Bro, it's $200 a year. There's no flood damage that you can possibly mitigate with $200 a year, even if you pay for 20 years before a flood, if a flood hits you. I mean, it's just that there's no correlation. I mean, the damage.
People don't see it like that. They don't see it in correlation to if this damage occurs. They see it as an add-on to
$200 extra. We have a friend, my wife, she's a friend of us, but more, a friend of my wife's a female friend of they're friends. And she just moved from Massachusetts, whatever. And last year, insurance was out of rehab, and she asked me, she calls up, John, how do I do this? How do I do that? And she called my wife. Hey, can you ask John they're telling me about this flood thing. It's $200. I mean, it's just, man. And then she nods $200. She's not going to pay $200 and to cover her house. Like, does she know? And then she kind of, when I told her that, like, oh my God, yeah. And she put, I mean, $200. That's what I pay for mine. That's what it's just not. It's not a big add-on. It's just it really, really isn't. If you think about it, like if you think about 1 inch of water, like if you're lucky enough, you get 1 inch of water, which is nothing, right? But you get 1 inch of water on your floor in your house. You know how much damage that 1 inch of water does in your house? Because it gets everything.
Kills your baseboards.
The floor, the base, the whole like.
And let's just say to replace baseboards and trims, that alone, right, between demo, reinstallation, and painting could run you up to $5,000. Easily. But
then if you're replacing the baseboard, you have to replace the flooring, the entire flooring. Not bits and pieces of the flooring, because if the water gets in, and if you're doing baseboards, that means the whole 1 inch. That's all it takes. Like
if you have carpet, you got to replace it. If you have wood, you got to replace it.
Tile is the only thing that
maybe you don't have to replace.
Maybe, you know what I mean? With 1 inch of water, I'm saying.
Yeah.
Plus the appliances, furniture. I mean, now that's another thing. Do people have content? If you don't put content, if you don't pay for content, it's not covered. People want the cheapest thing.
Yeah.
And then so it's unfortunate. That's just culturally how some people kind of are used to it. What's the cheapest thing, and they look for the cheapest thing, and so that's we should definitely have somebody who does insurance and provide some good info for people on it.
Yeah, we'll see who we can invite who's camera friendly and ready to have that discussion.
Well, don't discriminate. I mean, I'm not camera friendly, and I'm here. I mean,
hey,
we're not blessed with your good looks, so some of us are not that friendly for camera. We're not. Our mugshot is not that.
When I say camera friendly, I mean the personality and willingness to get in front of the camera.
I'm just kidding.
But yeah, you're definitely camera friendly, whether you like to admit it or not. So. But with that said, we'll see who we can invite, and we'll see if we can bring them on an episode at some point before you leave to Colombia.
Sounds good.
So, you got any final thoughts before we let them go?
Let's see what the ADP report says today.
All right.
I mean, again, in February, nothing pointed to that 517,000 jobs. Like, I mean, that came out of the left field. There was nowhere, and like nobody had seen that. Like, it was just out of the blue.
Yeah.
I don't see the same thing happening again. I don't see that there. So the expectation is that now it's not going to be huge. It's not going to be like a huge number, but there should be the expectation that it's definitely going to tame off. Oh, and let me just circle back. I digressed and we'll talk about something else. The season of the service and hospitality jobs and the jobs report.
Oh, okay. Yeah.
Those numbers have been increasing every month.
As far as the job openings for those,
as far as the openings, they've been increasing, really high, and there've been a lot of those new job openings every month. So that's been helping that number grow, right? And the reason for that is but if you look at the chart, I've seen the chart of hotel and service industry. What happened in the pandemic? Who's the people that got affected the most by that? It was restaurants, hotels, right? So they were pretty much you look at the chart in the pandemic, they're like at the bottom, like zero, right? Well, because everything was shut down. So they're, and so we're pretty much last month there was 119,000 job openings in the service and, industry, hospitality and service. This month was 81,000, 82,000, right? So it's going down, and it's been going down every month. And last month we were pretty much already at pre-pandemic levels of number of jobs in this hotel and service industry. So the jobs that were lost in the pandemic last month were pretty much got caught up, like got them all back. The people that lost the jobs before the pandemic or during the pandemic went back to work at the same level in the hotel and service industry. So what that means is that going forward, there's not a lot more room of huge numbers in 1 month of job openings, right? $200,000 in the hotel, that's a lot of jobs, right? 200, so
Yeah.
there's no longer that much need because those jobs have already been filled. So all that, you see how all that just kind of builds up. Like, so last month the number last month, they just, every month you see the gap as the roller coaster gets to the top on the, just like housing, just like jobs, they lag, but you see it, like you see the trend. Last month was 119,000. This month was 82 or 81,000. Next month should be lower than that, right?
Yeah.
So that all lines up for that, May 10th. That's why that's the day. Like it's not a day in the calendar.
I feel like
it's not a mystical day. That's just the day of the report. That's when the guy's scheduled to make the report.
I feel like we're counting down to Armageddon.
Well, for the economy, but for the mortgage world, it's a date of like rates are going to go down and get some stability.
Because we anticipation of the calming and hopefully thriving in business.
Yeah, because I mean they've literally taken the real estate industry and like they try to shake it to the core and destroy it.
Yeah,
I mean it's really what they're like. The way
through the news and the numbers.
Correct. I mean the combination of they just shook it, and going from 3% to 7% in 3 months. I mean that's just unheard of. That's just you know what I mean? There's just not something that's. I mean, it's a wonder how people are still standing. I mean, it was just a big hit.
Mm-hmm.
So we shall see what happens. So, but today is an interesting day with the ADP report. So we shall report tomorrow, see what happens. Check it comes out at 8:30. So I'm gonna finish up here and go start reading and paying attention.
Yeah, definitely. Tomorrow, we shall be talking about the Florida condo market, right? Opportunities and risks. And we'll also probably be, definitely be checking in with the data that you bring in from the ADP report. And we shall also discuss, we should throw in there discussing how many mortgage loan officers and realtors are leaving the industry. If we know that.
Yeah, I do not know. I don't know I honestly don't know the data. I don't know. I haven't seen it. I don't know if it's come out. I mean, there's been a lot of mergers in the mortgage industry, a few mergers, a few banks have gone under, but taken over, but but I have not seen any hard data yet on how many people, because I think it's hard to, it's too soon, because because I think there's still people that, I mean, the truth of the matter is, if you really boil all the fat, there is a large number, especially of realtors, not so much, but more realtors that do this part time.
Mm-hmm.
There's not a huge, it's not a majority of agents that are full-time agents.
Yeah,
I believe that the majority is people that have
part-time than full-time.
I'm sorry?
I said there's more part-time agents than there are full-time agents.
Correct. That's what I believe, that there's just a lot more part-time agents that. So obviously the part-time agents are the first ones to kind of drop in a market like this. The second thing, and this is a staff from the NIR, National Association of Realtors, average real estate in America sells one home a quarter.
Yeah, about 3 homes a year. 3 to 4 homes a year.
One home a quarter. That's been a stat since I first got into business 20 years ago, and that's still the same. That's the average realtor in America sells one home a quarter. So, it's obviously you can't survive. You can't feed your family selling one home a quarter. And so the 80-20 rule applies. I mean, it's just like in any other industry, the 80-20 rules apply. So, 20% of the agents do 80% of the business.
Yep.
And then the other, 80% fight for the other 20%. That's the part-time workers and the one. So, that's just the attrition is natural. But I haven't seen any stats yet on numbers, and because it's all, you know, who didn't renew the license, but what if they did renew the license, but they're not, now they're leaving now, they won't see that until they're, you know what I mean? It's just
Yeah, later
hard
on.
to see. Yeah, I haven't seen any data. But I'm sure it's gonna be a lot, like it's just an 08. I mean, 08 was the same thing.
Yeah, we'll see what
2008,
they
when I
have
went
on
through it, as
cumulative
both
data.
realtors and lenders, you know, disappeared. Yeah, so we'll see what happens.
All right, with that said, it's Robert Kenneth Morillo, broker associate with Team Aroa at Compass, Florida. License number 3373543, signing off. Let them know, John.
John Sepulveda, MLS 1309244, signing off. We'll talk tomorrow.
All righty, y'all have a great one.